Welcome to our Axios Pro FinTech Deals virtual event. I'm Lucinda Shen, Axios Pro FinTech reporter, and I'm coming to you from New York, New York. Welcome to our audiences on Facebook, YouTube, Twitter, LinkedIn, and on Axios.com. Join the conversation today on Twitter with @AxiosPro and hashtag AxiosPro. Today, I'll be joined by FTX CEO and co-founder Sam Bankman-Fried for a conversation on the current state of the crypto contagion and where FTX sees itself emerging from the crisis. And now I'd like to welcome Sam Bankman-Fried, CEO and co-founder of FTX, joining us from New York. Hi, Sam. Thank you for being with us today.
Of course.
Amazing. So I'll go ahead and jump into it. You have really become a lender of last resort. You've been given a lot of nicknames in the process recently. News organizations have called you the JPM of the 1907 crash, Warren Buffett of the financial crisis. Where do you see yourself? Where do you see FTX emerging from this? And what position do you see the company coming out of this?
Yeah, I mean, obviously we'll have to see exactly where our market position is, but what I'm hoping for is that, first of all, obviously, continue to grow market share, domestically and internationally. But I think outside of that, the biggest goals are, first of all, just to, first of all, beyond even where we end up, is just for the space to end up in a good position, for customers to be protected, and everything to end up stable. That's the most important thing, and it's more important than the particular position within that that FTX ends up with. But outside of that, I think the biggest things that we're looking at here are try to be in a position where we have all of the regulatory positioning that we need, the licensure that we feel comfortable with that going forward. I think we've made a lot of progress on that over the last year, and I think there's more left to make, but I'm very optimistic. I think especially in the United States that we're trying to to push forward quite a bit on the licensing front, and to be able to have a more full product suite in the United States and to be federally regulated. Outside of that, to start to establish our I think retail financial experience, both in crypto, but also more generally in finance is a big goal of ours. And to have just continued making our products better, every way that we can.
Yeah, so I'm glad you brought that up because you're well known as a crypto company at this point. You actually haven't been around for that long. It's around 3 to 4 years at this point, but you have jumped into more of the traditional financial products. FTX.us, for example, is mirroring FTX and jumping into equities and thinking about tokenized equities. You are at the wait list level at the moment. Can you give us an update in terms of what that looks like or what progress looks like on that platform right now?
Totally, yeah, and we're really excited about it. We are very close to going live for the full audience there. I think the only thing, frankly, that's left is just to get the mobile app experience better, or live really in the first place. I think we've ironed out everything that we needed to, in terms of the operational side. Optimistic that within a month we'll be fully live for everyone.
Fully live. So how large is the wait list right now? What volumes are you looking at, keeping in mind that this is still testing phases?
I think we have tens of thousands on the wait list right now, which is it's a non-trivial number for us, and I think that we have a lot more who have expressed interest. I honestly don't know exactly how big this will get as a product. It wouldn't shock me if a month in, this is a huge part of our experience on FTX US for a lot of people, and it wouldn't shock me if this takes a long time to really grow as a product. I think either extreme is pretty plausible here. So we'll have to see, but I'm cautiously optimistic. I think we've seen a lot of excitement, and I'm also cautiously optimistic that over time we'll be able to build an actually superior experience and market structure stack here for consumers, which hopefully should make the whole thing cleaner.
What does that mean?
Yeah, so I think that one thing that it means is you look at a lot of these settlement issues that have appeared in the retail brokerage space. I think especially you look at what happened on the day that GameStop got particularly volatile, and basically what you had was settlement uncertainty between all of the various parties there, to the point where things basically ground to a halt, and that was not a good experience for anyone that day. And one thing that we're very much aiming to do is to be in a position where where hopefully we can have a unified, clean app experience that goes front to back, through the various parties necessary for an equities transaction, without the mess and settlement uncertainty that I think caused a lot of the problems on the on the day that GameStop went sort of particularly volatile. So that is one of the goals that we have for the product, on top of just generally delivering as good and clean of an experience as we can.
Right. Well, so what does that mean in terms of how does it differentiate from current models of equities trading? Are you thinking about changing up the way that trades are currently executed in any way?
So, I mean, first of all, we are working and acquiring an equities clearing firm in bed so that we can be self-clearing. On top of that, we do have a partnership with IEX, a national securities exchange, which we're excited to work with on building out coherent equities market structure. And then long term, I think we'd be excited to explore tokenized equities market structure that frankly is pending regulatory developments, which I'm optimistic we're going to see over the next year, that will sort of clarify how to build market structure for tokenized assets that back other assets, in this case equities. So those are, I think, kind of the core pieces of it.
So the tokenized assets, you effectively, it sounds like we might see something on FTX on the US side, at least within the next 12 months.
I mean, we would love to. Obviously, this is sort of contingent on regulatory developments and contingent on ongoing conversations with regulators. I think we are excited to explore that area, and I think it could have a lot of benefits for consumers. But all of this is contingent on regulatory developments.
Yeah. So I want to circle back to the regulatory developments because you spend an inordinate amount of time on that at the moment. But I am also curious, another part of the equity side that you focused on, you personally acquired a very large stake in Robinhood relatively recently. And so there are limitations on that stake. There's been a lot of speculation on what you end up wanting to do with it, because you can't really outright easily buy the company because you don't have a controlling stake in the business. And so I am curious, from your perspective and your point of view, what was the thinking behind buying that stake?
It's a good question. And one of the core pieces here is, I think that I think there is attractive pricing. And I think that obviously it's fallen a lot from the peak, but I think that to having a really, really strong future and building out to be a sort of next generation asset management and trading platform, sort of technological first, mobile first, and getting more integration with the crypto ecosystem over time as well. So I'm excited about all of those aspects of it. I think it's a high upside play. I certainly don't know for sure what's going to happen, but it has an enormous amount of adoption, and it's trying to charge forward on its product and market structure in a way that most are not. So I think all those parts of it are really exciting, and we'll see where ultimately all of this ends up. But optimistic that it's going to end up in a place where it's redefining to some extent what equities and generally what the mobile financial experience could look like. We're obviously looking at similar things. Also excited about the potential of working with Robinhood on various things. And I think that you look at, especially internationally, some of the back end and licensing products improvements that we've been making. You look at some of what they've been building out, especially in terms of the consumer experience and brand. And I do think that those form a potentially powerful combination. And so that's another thing that, like, I think in general I'm always excited to explore partnerships. But I certainly think there are potential ones there. And I think in general that there's been a giant opening left for what the consumer financial experience looks like as things become increasingly technological.
Right. So I think when you first acquired that stake in the business, and even more recently, there have been M&A conversations directly between you and Robinhood, but also at the very beginning, at least, Robinhood did not seem like they had spoken with you. They didn't know that this was coming at that point. And so have you had a conversation with Vlad since?
I've talked with him now and then, not particularly about my stake in Robinhood, obviously, like, have mentioned that I have it, but when we talk, I think part of it honestly is just talking about the industry and sharing views, and I think part of it is I'm always looking for ways to think about are there ways in which it makes sense for us to partner with different players. That's true of everyone, and that we sort of are in the same space with, and I think often there are ways to potentially work together, and so that's something that I sort of bring up with with everyone with whom it would be plausible.
Okay, so let's talk a little bit more also about how you're thinking about acquisitions at this point, becoming, well, not just acquisitions, but also how you're thinking about lending. There are some companies that you're more willing and that you believe actually do have a chance of making it through all of this, and that you believe have a stronger balance sheet than others. And so you've actually handed them out credit lines and taken a stake in some of these companies. And so, but you've also had kind of a list of priorities, right? It's partially about helping the retail traders, making sure that their deposits are safe. Another part is also making sure that you're preserving the health of FTX. You're running a company after all with shareholders. And so when you're thinking about the grand scheme of how you're prioritizing and making these decisions on what companies are worthy of your investment or worthy of being bailed out, quote unquote, how do you make that call? How do you list those priorities?
So I think first priority is like, are there customer assets that we can help protect? That's a big priority for us. And second one is there a way to stop contagion from spreading through the ecosystem, right? Is there some credit facility where there's bilateral credit in various directions, and there's a way for us to stop that from from sort of igniting chain reactions? And so that's another piece of this. And then contingent on those two, is there a way for us to do this in a way which is like not a horrific deal for us? And the bar here isn't like, is this an amazing economic deal for us? Because the first two parts of this really are priorities of is there a way for us to help stabilize the ecosystem? But contingent on that, we obviously want to do these in ways which are economically sustainable. Obviously, there's a finite amount of resources that we have, and so we don't want to blow all of it on sort of hopeless cases. And so sort of constrained by but we are willing to lose a little bit on this. When all is said and done, it's all a matter of of degrees.
I mean, but the end goal is ultimately to come out of this stronger rather than lose capital.
Yeah, ultimately we want to come out of this stronger, and that's not the only goal, and it's probably not the main goal with most these bailouts. The main goal is just stability for the industry, but it is a goal, and we certainly don't want to come out of it weaker for having done all of this, if we can avoid that.
Right. I mean, this is a difficult question, but how much are you willing to lose?
So, I can give you some empirical information about that, right? Which is that, like, obviously everything depends on the circumstances. But I think it's public knowledge. You can look at the credit line that we gave Voyager as an example here, where we acted pretty quickly because that was what was necessary. before, frankly, it would have been possible to have full diligence. And, the way that it was structured, there's 70 million there that was just immediately drawn and completely junior to customer assets. And, we viewed that as like, we may lose that, that the end of this may be that we never see that 70 million again, and that's okay. Obviously it's not ideal, but we can live with that. And that may in fact be how this turns out. And and so empirically that was something that we ended up becoming comfortable with. I think that what we would not have been excited for, well, there are a lot of things in theory we would have not been excited for, but one of them would have been a $500 million sort of incineration for that, right? And you can see that also in how we structured it, where we're willing to do larger size if that is what is actually going to stabilize a company, if the company is in a strong position after that. But we sort of don't want to just flush 500 million down the drain. And so that gives you some balance on what we were sort of willing to lose without even getting that unlucky.
Okay, fair enough. So 500, that explains, because the other question I would have had is why not? Because there are a lot of other companies and a lot of other blowups that would have been worthy of saving if you're purely evaluating based on contagion, right? 3AC, Terra, but I'm guessing they fall into would have been more than a $500 million incineration category.
I mean, exactly. I mean, you look at I think 3AC, I don't know, but it looks like it may have been many billions of dollars to actually, if we actually want to bail out 3AC. And Terra, I mean, I think it would have been billions of dollars to start with, but I don't even think that would have fixed the whole problem. Fundamentally, in the long run, it's hard to imagine how that ends up super stable. Because you had a quote unquote stable coin backed by the ability to mint a volatile asset. We could potentially have, for many billions of dollars, dealt with a temporary imbalance, but I don't even think that would have solved the long run problem there. So, yeah, I think that's a lot of how we're thinking of it. We have a fair bit of capital, but it's not an infinite amount of capital. And, we want to act responsibly to use that capital, in the most efficient way that we can. And, rather than blowing it all on one case where we might not even, it might not even have been enough.
Right. So you're kind of because you have kind of acquired BlockFi, you are kind of in the lending business at this point. And so one thing that's popped up a lot over the course of this contagion, and you've mentioned this is something that you're trying to backstop, is customer deposits, right? There's a lot of questions about the fact that they aren't well protected. There's no FDIC insurance. I don't know if you had a conversation about this recently, but do you envision any possibility of regulators being interested in or amenable to the idea of making crypto deposits FDIC insurable?
I think there are going to be conversations around it. I think that when you look at the FDIC insurance piece of this, in some cases, I don't know whether that will ever be a thing. I think were it to be a thing, there are cases where I think it would make more and less sense. And I think that you could imagine a world in which exchange assets, assets which are just custody on exchange end up with something like FDIC insurance. I'm not saying that definitely will happen, but you can imagine it happening. Now, when you look at something like, Celsius, I mean, it's hard to see how that ends up in an FDIC insurance regime, because there was credit there, right? That wasn't just customer assets being stored with with sort of de minimis interest paid in a cold wallet, right? That was a credit rehypothecation business, which was, incurring some risk in return for some, potential economic return. And so that one, I think it's not a great fit for FDIC insurance, which I think is intended for things that really definitely are not going to blow out no matter what.
So effectively, there needs to be some kind of stronger regulatory regime or skeleton, basically, around what can be FDIC insured, if crypto were to go down that path and what can't be.
I think that's right. And I think it's the same thing in traditional finance where like some things are FDIC insured, right? But like if you buy a bond from a company, there isn't like FDIC insurance that bond that company will not default, right? Like that sort of like is risk inherent in the system. And so I think that what you're looking at is the difference between like something where like there should be effectively zero risk versus something where there is a risk reward trade-off. And you can talk about whether there's sufficient disclosures and transparency around this, and whether the risk management was done in a responsible way. But where fundamentally there is an expectation of risk and potential return, and so FDIC insurance I think makes less sense.
So last question for you, but you had a conversation with Matt Levine over at Bloomberg on Tuesday, and you mentioned that FTX had considered actually buying Bitcoin at a certain price for the Treasury. The price never hit, at least for the FTX Treasury. But what was that price, and would you still consider it if the price were to go down to that level?
We would consider it, and I think that like I'm making I don't necessarily want to give an exact level, and this changes over time, and it changes with what we're seeing in the market, and it changes with what the other opportunities are available for us. But I think if it got way below 20K per Bitcoin, I think if you get into the 15K range, we would think hard about that. We think very hard about that at the 10K range per Bitcoin. From the perspective of like, it seems like the market really needs liquidity there if it's getting to that point, and from the perspective of it just looking like a good purchase on a medium-term timescale. That being said, I should hedge all this with macro environment, right? Like if Nasdaq's down 50% from here, I expect crypto will likely have fallen given the current macro environment that we're in. And so, some of this is raw pricing, but some of this is probably better thought of as relative to where risk assets are overall.
Great. So we do have some Q&A from audience that have been submitted over time. So I'm going to ask you a few of these and read out who they're from. So this is from a manager at Sequoia, Joel Graydon. He wants to know, what do you see as the contenders for the first killer app to be built on top of crypto?
So I think that the first killer apps, I basically think there's like three real contenders for this. One of them is a payments and remittance app. One of them is actually just a market app, but not just a crypto app, but a broader market participation app, which rebuilds a lot of market structure using crypto rails in a way which could be powerful and cleaner, and tokenizing a variety of assets. And then the third is social media. I think that on-chain social media, which is interoperable, could be super, super powerful. So, if I had to guess, I'd guess one of those three, but, obviously I don't know for sure. We'll see.
Great. And so we have another question from the president, CEO, Peter Haywood of Paragon Advisory. What are the most essential building blocks for Web3, which are missing or very nascent, which needs more focus?
Yeah, I think that like, first of all, just like continuing to improve blockchain reliability, speed, latency, throughput. I think we need to get another 2 orders of magnitude on overall layer 1 blockchain or layer 2 blockchain performance, or some blockchain performance, before we can get, start talking about 1 billion people using a blockchain system. So I think that's one piece of it. And then, I think another thing is just on the regulatory side, like having regulatory clarity such that there is customer comfort and protection, and so that institutions have a way they feel comfortable accessing the ecosystem.
Another question from the same asker. FTX is highly efficient on operation costs versus trade volume basis out of most rankings in the TradeFi and DeFi world. And I'll augment his question a little bit. Basically, how is FTX doing right now? We're seeing a lot of the rest of the exchanges having some issues in terms of volume. Where is FTX expecting to be at the end of this year as compared to last?
So, I expect that we will be profitable every quarter this year. I don't necessarily know that I can promise that we'll never have an unprofitable quarter, but like ever, going forward, but like, I'm not sure we ever will. And we try and run a profitable business, weird as that has been over the last few years. I think that like, we're going to have to see what happens with macro and what happens to a few other things. I think that, we've been running kind of roughly in line with last year. We'll see where numbers come out at the end. But I think we've obviously seen markets cool off in general over the last few months. On the flip side, we have generally been gaining market share. Those have, like, roughly speaking, offset.
Great. Okay. And of course, that's also helps you come into the position where you're able to play lender of last resort. So speaking of legislation, what do you think, or what do you believe should be taking top priority right now? What needs to happen?
In terms of the crypto ecosystem, stability, or I think
yes, just crypto legislation.
Sorry, legislatively.
Crypto legislation.
I think that sorry. I think that there are a few pieces to this. I think the easiest piece and a piece which will be really healthy long term is stablecoin regulation. I'm optimistic we'll see that, or at least see the starts of that over the next year. That's one piece of it. I think that probably the most urgent piece of it is marketplace regulation, such that the consumer-facing businesses can have federal oversight. And I'm optimistic that we will see things, and we already have seen bills introduced that address that. If you look at the Gillibrand-Lummis bill, for instance, optimistic that we will see more there, and that we may actually see progress on some of those bills towards becoming law as well. And then I think of the asset categorization or classification, or alternately just asset registration, no matter what you call them. I think that's going to be a piece as well, and it might be folded into some of the marketplace treatment, or it might be its own standalone thing. And that might be coming from agencies as much as is coming from Congress.
Got it. Well, as a follow-up on to the most urgent piece that you were talking about, the marketplace for consumers, protections on that end, what should that look like? The bills that have been introduced, what piece do you find to be the most compelling, or what do you think is most urgent?
Yeah, I'm pretty excited about the bills that we've seen. I think that they would be healthy, and I think that they would go a long way towards creating that regulatory clarity and protecting consumers. So I'm surprised and happy with the progress that has already been made. I think that the core thing is just having one or two federal agencies that oversee the crypto exchanges. And in a lot of ways that can look similar-ish to their oversight of traditional venues. There are a lot of similarities there. There are also some differences, and those are going to have to be worked out. But I think at the high level, having the same principles as as agencies have for traditional asset exchanges, and it may be different in the details, but the same overarching approaches of protecting consumers, having transparency, clarity, fair, equitable market access, and within the framework allowing for innovation.
So we have another question where we're going to ask you to play clairvoyant from the Tobias Feister of Equalis Capital. How long will it take before people will stop caring about the huge drop in crypto prices? And how long do you think it'll take for us to hit a recovery?
So I'm going to go out on a limb and say people already care a lot less than they did a month ago. Already, I think we have seen a shift in sentiment to some extent. I think, more broadly, it's going to depend on what happens. The world moves quickly nowadays, shockingly so in some ways. And so I think that you could see things turn around remarkably fast. That's not to say they definitely will, but there's no reason it couldn't happen. And I sort of think that over the next, if the general macro environment is stable, I think that over the next few months, we're going to start to see people move on from the crash mentality. But, that is contingent on what happens with the overall economic environment. If we see things crash further in risk assets more generally, that is probably going to reverberate through crypto.
Right. Bringing it down to a personal level, you've actually seen a lot of companies come to you after you started after you started bringing out lines of credit to the Voyagers of the world. And so have those asks fallen in volume?
They absolutely have. I think that we got a bunch of calls in that first week or two. We're not getting a ton of calls anymore. And the remaining ones that we're getting either don't actually need anything, or are way smaller. So obviously I can't know for sure what's out there, but we don't see particular evidence of more large endangered businesses.
Great. Well, we're out of time, but thanks for joining us.
Of course, thanks for chatting.
Thank you all for joining us this afternoon for this Axios Pro live event. If you love this conversation and want to be able to access our exclusive subscribers only Axios Pro events, please visit axiospro.com to start your free trial.